Good morning, afternoon or evening depending on where you are in the world watching this right now, and welcome back to another video on my investment portfolio channel. So it's been another interesting week in the market that has seen even newer highs for some of the indices and stocks. Jay Powell having his say on inflation, and also some drastic changes on Trading212's side, which saw the likes of NIO being removed from the ISA section. But as per usual, in this video we'll be going through my top winners and top losers for this week, and then just to touch on some of the new changes around pies and the removal of some of the stocks on Trading212's platform. And let me not forget to start off with my pies actually and see how they're performing. So as you can see, my pies are in decent shape at the moment with drastically more money in them compared to the previous video, and this is down to the new changes that Trading212 have finally implemented around importing existing holdings into our pies, which I will touch on a bit later. I was actually quite surprised at how well my growth stocks had been performing. I know they have gone up a bit. I wasn't kind of expecting this certain number or that certain number of percentage gains, but it kind of surprised me at how well they've been doing so far. And then as you can see, my dividends and my risky parts of my portfolio have gone down. My dividends, I'm not too concerned because they are less volatile stocks. I don't expect them to have exponential growth or big losses. And then for my risky section, it's in the red mainly because of the Tesla stock split. So my fractional shares of Tesla have been sold, and I guess those were the shares that were practically holding up my risky section of my portfolio in the green. So now they have gone, I have slid into the red, but that's fine as well. Okay, so let's move on to my top winners this week, starting in second place, which is home to, where is it? Roku. So Roku is part of my risky section of my portfolio, but I'm kind of tempted to move it into the growth section, but I think I'll need to do a little bit more research on that before I do that, so I'll just keep it where it is at the moment. So Roku, what happened with Roku this week? Well, I'll tell you. Roku has benefited this week from generally good momentum accelerated by bullish analyst calls and a strong appetite for growth stocks. One bullish note came from an analyst at Citigroup that initiated a buy rating as well as a $180 price tag, which is just now $8 away from the price it's currently sitting at. Then on Thursday, an analyst from Deutsche Bank had already a buy rating on the stock, said that the adoption of connected TV is steadily rising in the US and Roku is leading this current market, which is kind of interesting when you think of the big companies that Roku has as competitors like Amazon Prime, Netflix, and don't Google even have their own thing, a Chromecast? That has really fallen off, hasn't it? I haven't heard a lot of news around that for a minute. But yeah, when you think of Roku's competitors, it's interesting to hear that that analyst actually thinks Roku's ahead. Personally, at the moment, I think Netflix is dominating the market, and it's not even close right now. I mean, they have their own shows, so that's kind of like their main standout point for them. In addition to this, the overall sentiment of the rising market has helped propel this stock up about 17% this week. So yeah, as I mentioned, this is a stock currently sitting in my risky portion, and for it to solidify itself in my growth portion, I'm just going to need to do a little bit more research and see if I like the direction it's going in. I overall believe that the quote unquote normal television will eventually die out. Well, not die out, but greatly deplete and be replaced by streaming content. So it will be one I hold on regardless of what section of my portfolio it's held in. Alright, so moving to my biggest mover this week, we have, actually I'm going to need to go to my invest section account now, because as I'll talk about later, NIO has been kicked off the ISA. So NIO is my biggest winner this week, increasing around 31%. This surge kind of started off when a UBS analyst upgraded his stock rating from a sell to a neutral, and also raising his price target from $1 to $16. I mean, what is my man thinking having a $1 price target? I don't even know. But the market kind of forced him to raise that price target anyway. No matter how miserable he felt about the stock, he had to do it. I mean, this stock is not going anywhere near $1 at the moment. And this kind of sent people crazy, causing the stock to climb 20% on Tuesday. Then on Wednesday, a Morgan Stanley analyst upgraded NIO from equal weight to overweight, citing that the improvement in fundamentals were the reason for this. He also upgraded his price target from $12 to $20.50. And there's more. There is more. A guy from Citibank also got involved by increasing their price target from $18.10 from $16, but kept their neutral rating the same. I don't get why they have to be so precise with their price target. I mean, why are you saying $18.10? Why can't you just say 18? I don't get it. So yeah, it's not hard to tell why this stock has rocketed this week with all the bullish sentiment in the air right now. And you can also kind of make out that this bull run was kind of approaching just by looking at the charts. So if you are one of those people that likes to look at the technicals of a graph or whatever, then I guess you probably would have got in NIO at the right time, because it was kind of on the trend of a bullish up run. It's an interesting company for sure, and with growing competition with the likes of XPeng or something that had their IPO this week, it'll be fun to see who eventually comes out on top and how well they'll be able to perform internationally as well. But one thing to note is that though their shares had a great week this week, they fell on Friday after it announced it was giving away around 75 million American shares with the intent to increase company's ownership in NIO China, as well as some other reasons that I won't just get into now because I just want to enjoy this moment. But if you're interested, I'll leave the links to the articles in the description as I always do. Okay, so coming on to my top losers this week, if I just go back to my ISA, the first top loser we're going to talk about is Boohoo.com. So Boohoo have gone down about 5% this week, and they've had an interesting couple of months, kicking it off with the controversy that it had with the factories in Leicester, where they were facing some ethical and rather legal issues with the way they treated their workers. Now, I'm not sure it was them directly, but maybe their supply workers, but obviously they're the bigger name in this whole situation, so they'll get the blame for it. And ever since then, it seemed like those factors have been ignored, as we've seen resurgence in the retail market, causing the stock price to rise back up to levels that we saw around April time. But now this week it has slid roughly, as I mentioned, 5%. I've seen that major ethical investors have exited their relations with Boohoo, and that a well-known industry group that monitors supply chains has refused to give evidence to Boohoo's situation in court. So this legal battle seems far from over, and it does look like it plays a big role in its fluctuating share price. I mean, with some companies, whatever controversy they get from the news, it's sometimes ignored in the way of their price in the stock market, but it seems as if this is playing a significant role for Boohoo. And in the short term, I think it might deter investors from investing in them, but in the long term, I think once all the muddy waters have been cleared and Boohoo do get fined or punished in a way, as I believe they should, then the stock price should slowly but surely go back up again. Alright, so coming on to my biggest loser this week, we have Digital Turbine, which I'm still in the green for, luckily. But this week, as you can see, it's fallen around 15%. I think this was actually my biggest winner last week, or last video should I say. I couldn't really find one bad thing in the news about Digital Turbine this week. I mean, not to the extent that it would have warranted a 15% drop. I couldn't find anything that was so impactful that caused this magnitude of a drop this week. So I'm simply just going to blame it on physics. What goes up must come down in it. I mean, it had such a good run of gains in the last couple of weeks, and even throughout the year. Maybe it was just time for it to correct itself a bit. And even though an 80% drop over the week is drastic, maybe that is just what it needs, but I'm going to keep hold of it for sure, and I'll probably do some more research into why it dropped 15% this week, because that is a big number. Alright, so to close out this video, I'm just going to quickly talk about the changes that Trading212 have implemented. As I mentioned earlier in the video, Trading212 have finally added a feature in which you can import your existing holdings into your pies, so that now the information in your pies shows an accurate representation of all your holdings, and honestly I could not be thankful enough. So in order to import your existing positions into your pies, all you have to do is first go into your pie, come over to holdings and click more actions. Okay, so I'm rebalancing this risky portfolio. Let me go into growth, holdings, more actions, import investments, and then you should be able to import your investments in here. I'm actually going to import Apple now because that has been taken out due to the stock split, so I'll just put that in my growth. I know it pays dividends, but the dividends aren't that much, so I just keep it in my growth section. And yeah, that's how you can simply import your existing holdings, or if you want to export them, you can just click export, and then it gives you a list of options or stocks that you hold in your pie that you wish to export. You also have the option to share your pie. So if you come to overview, go down and click share pie, it will generate a link for you that you can share with your friends and anyone. And then if they click on that link, they'll be taken to a web page where they can see a list of your holdings within a pie. So yeah, that's been pretty cool. So all in all, these little touches have made it a better investment experience for a lot of us. I think the main thing to come out this week was around the eligibility of some stocks in our ISA. I read that some people got the notification and others didn't, and there was some confusion around what was legit and what wasn't. People weren't too happy that they only had 1 or 2 days to sell their stocks and so forth. It was just a whole kerfuffle of a mess. Basically, here's the bottom line. There was a message put out on the forum that I saw around July the 6th that questioned the eligibility of NIO and other ADR stocks within the ISA section of the app due to HMRC legislation, and other platforms such as Free Trade already knew that. So Trading212 said that they were going to look into it, as they should. So now, just over a month later from when I saw that original post, they confirmed that they were going to remove those stocks that aren't eligible to be in an ISA, but you still should be able to invest in them through the investment part of the app. So they gave us 1 or 2 days in order to sell our ineligible positions before they did it themselves. And that's basically it. I don't know if Trading212 will get in trouble for this or if there will be any type of compensation involved, but I'm seeing people complaining on the forum that, oh, I'm going to lose all my gains, I'm really disappointed in Trading212, what a mess, and so forth. And it's actually quite amusing to see, but in reality not that much is changing. I mean, obviously if you're now transferring to the investment part of the app, you're susceptible to capital gains tax, but then these same people are complaining about losing their gains and whatnot. And listen, all you're doing is cashing out early. There's no need to cry. The company's value is going to remain the same. If you still like the company, invest in it again. Like, am I missing something here? Because I don't really understand what all the complaints are about. I know Trading212 really effed up here, but I don't really understand what the outcry is about. Sure, you're going to lose your gains that you've made. Essentially, you're complaining about wanting to see more green in your portfolio instead of red. I don't know, it just baffles me. But yeah, it seems like around 90 stocks will be removed from the ISA section, of which I invest in 2. So if I just quickly go to my investment account now, you're already seeing that I have NIO in there. I also have NIO Technologies, which has also been removed as it's an ADR stock. Under Armour I just got for free from someone else. But yeah, they promised that something like this will never happen again, and good on them. And on that note, I'm just going to wrap up this video and I'll catch you in the next one because I have to watch the Arsenal versus Liverpool match.